Us now, Dan Ives, he's the global head of technology research over at Wedbush. Dan, happy holidays, great to have you here. Yeah, great to be here. Want $250 for free? eToro's got you covered. Sign up and deposit any amount from the link below. All right, so let's talk about your price target. You're the highest I've seen, pretty much. You just raised it from a couple of days ago. You put out a note on Monday, and you've raised it since then. What have you seen? What channel checks have you seen that are going to make you raise your price target just within a few days? Yeah, I mean, checks over the last 48 hours are showing, I think, strength from a holiday season perspective. It's our view this is going to be a record year. 240 million iPhones. I believe they ultimately sell. And what's wild, this is just the beginning of an AI-driven supercycle that's multi-year. And that's why, look, haters continue to hate on Apple. But I believe $4 trillion is just the start in terms of where we see it going. Because the consumer AI revolution will go through Cook and Cupertino. When you look at multiples for this one, though Dan, I mean, 37 times last 12-month earnings, about 30 times forward earnings depending on the estimates you've got, overhang in China. You've got a lower uptake in terms of people who were buying new iPhones for this AI supercycle that you mentioned. Do you feel at all that the price could be a little fully valued at these levels? Yeah, look, and I think that's really been the argument. I'd say, almost like the last, call it, 2-3 months. Where I disagree is you got some of the parts. I believe the services business alone is worth $2 trillion, and I think the AI story, because as AI revenue starts to come through over the next few years, that could be an incremental $10 billion annually for Apple, and then you put it all together. This is one where I think the greatest way to see this is what growth is going to be on iPhones. I feel 5 to 6% is way conservative. We're looking at high single-digit, double-digit. The renaissance of growth is now happening at Apple, and that's why I think this is just the start of what's going to be a golden year for Cupertino. Have you looked at all at the interplay between the upgrade cycle and inflation? And I ask that because as consumers are wrestling with rising prices of, things like food and shelter and vehicles and so forth, do they tend to kind of trim back on updates if their phone is working just fine, independent of the technology that's out there? Do we need to see a significant drop in inflation before we have this upgrade cycle that everybody has been kind of depending on here? Yeah, I believe maybe on the edges that's been an impediment for upgrades. But the main thing here is 300 million of 1.5 billion iPhones are in the window of an upgrade chance, have not upgraded in 4+ years. And you look at the carrier discounts that we're seeing. They are huge. But again, the key point is it's about Apple intelligence. It's only begun with 18.2. Now, as this all rolls out, hundreds of apps that are going to be on Apple. And I think that's why the consumer AI revolution, I still believe the stock is not reflecting what's genuinely going to be what might be an increment of $40, $50 per share for AI. So Dan, you came out with your note. According to your estimates, over 300 million iPhones have not received an upgrade in the past 4 years. You think that 240 of them will be updated this year in the current fiscal year. However, I have already questioned why. Why are we upgrading for Apple Intelligence? We look at AI PCs. We'd have not seen the same uptake. According to recent shipments, HP discussed AI PC flat year over year a lot. When I looked at Dell, they talked a lot about AI PC's 4% year-over-year decline. If we don't actually want AI laptops, what distinguishes iPhones and phones from laptops? The largest issue, in my opinion, is that when it comes to phones, the average upgrade cycle is, let's say, every 2.5 to 3 years. It's 4 now. So you're beginning to reach a stage where demand is backed up. However, I agree with you that this will be a cycle of upgrades for the entire ecosystem, from iPads to Macs to iPhones, which will ultimately be driven by them. However, it will eventually be powered by AI. As a result, this marks the beginning of what will likely be a 2-year AI-driven supercycle. Frank, I agree with you that the install base and monetization are the only factors that I believe are undervalued. Only 15% of it has been penetrated. In other words, 25 to 30% penetration. We're not talking about $4 trillion. we're talking about $5 trillion in 12 to 18 months. This year, Nvidia also attracted a lot of retail investors. Throughout 2024, it received inflows of around $30 billion. That's what Vanda Research says. Now, SPI, which is based on the S&P 500, and Tesla completed the top three. This simply relates to how Nvidia has entered the discourse surrounding money management, basketball courts, and dinner tables. You've undoubtedly heard someone say the ticker symbol NVDA wherever you are, and you may have even heard when they entered. Yes, you are correct. After a year, this NVDA has gained widespread recognition. But I believe that many people are still unaware of what the firm works. I contend that many investors are still unaware of Nvidia's capabilities. It is a highly complex business that is developing at a rate that few of its rivals are matching. Of course, that also applies to the people at Intel. What caught my attention about this Vanda data as well? Brad, really two things. JP Morgan and AT&T are among the top 20 companies owned by regular investors. Now we've talked a lot with CEO John Stankey and featured AT&T here all year. As it has recovered, AT&T has been one of the most impressive companies this year. Naturally, JP Morgan is still doing well. Additionally, this amusing statistic, in my opinion, demonstrates how active the retail investing community is still in these markets. This year, self-directed retail investors brought in a net new inflow of $265 billion into U.S. markets. That is roughly $25 billion, less than the average for the previous 3 years. However, there is a substantial number of retail investors who are actively participating in this market, attempting to better their lives and financial circumstances, and who may not be very concerned about some of the values on these firms. Will they be worried next year? To be ascertained. This article also discusses a significant change in the perspectives of some individual investors. From meme stocks and the momentum trade, we've moved on to firms with solid fundamentals and a longer time horizon. We're not simply trying to get in on the trend. We're trying to be long-term investors. You enter various fund manager questionnaires for this reason. Where is the busiest trading at the moment? MAG. Long MAG. That essentially just provides you a better idea of how the retail investor has changed in the short term and how that is somewhat reflecting the changes we have observed from many institutions throughout 2024. Special thanks to individual investors. I adore you all. I adore you. Okay, let's begin with Nvidia itself first. On the surface, you would think that, well, it's Nvidia, 8.25% seems pretty fair. But the implied move for tonight's earnings is around 8.5%. The average change over the last 5 quarters, as we and I look back, was 7%. 8% then? Reasonable. But if you go a little deeper into those figures, you'll see that in February, when the stock was 67, you had a 16% spike in 2 of those quarters. The stock is available today. Again, it's becoming more difficult to move due to the company's size. You should probably avoid expensive ones unless you truly believe it will have a dive. Want to get $250 for nothing? You're covered by eToro. Use the link below to register and make any deposit.